Good evening, guys, and a warm welcome to our weekly mentorship video. Yes, of late, I haven't been recording due to the fact that I'm trying to give you guys time, and also to give you the leverage for you to be in a position to do your own analysis. Not that you always have to expect that Ivan is going to send the weekly mentorship video. And if you've been following through, the last one that I did covered almost like 2 months, 3 months period in regards to our directional bias on dollar, which is bearish, right? So today I'm going to do things a bit different, right? Yes, it's a bit different to you guys, but that's like my foundation, my core approach to the market in terms of me coming up with a narrative to say that, okay, I'm going to be bearish on dollar, or I'm going to be bullish on gold. You know, how do I come up to that narrative? So we all know everything starts with macro analysis. Everything that we use uh, in our strategy, institutional order flow, everything has to begin with the long-term interest rates. You need to be in a position to understand what's going on there before you even start looking at the currency pair to trade or to look for opportunities. So what I'm going to do today is I'm going to look at the three most important interest rate triads. That's to say the 5-year and 10-year and the 30-year government bond yields, right? Reason why I'm going to do this is so that you guys can understand how I get to be so sure that, okay, dollar is going to go to the downside or dollar is going to go to the upside, even though we do get certain times when dollar is bearish, but you see that there's times when it's actually going to move to the upside, most probably redistribution, or it can be vice versa, right? So to begin with, we've got the 5-year bond yields, right? And already from this whole monthly setup, you see there's a significant bullish order block right here, right? There's a significant bullish order block. Now, that bullish order block, the fair value gap has already been filled right here. It was filled by the current month's low price point. That's the one that filled the what? The fair value gap. So you can already see I've marked 2 points of interest, right? On this chart, I've already marked 2 points of interest. Now this is the line chart, and you can see the lowest point, the highest point for your price action. But I'm just going to stick to the candlesticks right now. Now this structure here, what is it showing us? You see, is it showing us a market structure that wants to go to the upside, or a market structure that actually wants to go to the downside? Right, from my own point of view, this bearish order block has provided huge resistance to price, right? This last up close candle, this is the last up close candle. This one is not, right? This one just returned to fair value for another leg to the downside, right? A lot of people were trapped here. A lot of buyers were trapped. Now, we are not creating any new highs, right? But we are creating new lows. Look at every down close candle. Low, low, lowest point, right? It's not a coincidence that price found support here, right? It's not a coincidence. That's fair value for longs. Now this is the current month, so there's two weekly candles there. There's two weekly candles in this. I think it's three now. Yeah, the other one, I think, yeah, it's three. The other one opened today, so there's three weekly candles there. There was nothing wrong in taking what long trade. So from this reaccumulation in fair value on a monthly chart, fair value for longs, ultimately we're bearish on long-term rates. They've been so high for quite a while, and right now market structure is pointing to the downside. So this week here, see the week on this 5-year monthly chart. What do you think was the effect of this movement to the upside on dollar? A bullish dollar, right? Which is what we saw, I think, Thursday and Friday. We saw a very strong bullish dollar, and it won't be surprising if I'm to go to the daily chart on the 5 US government 5-year yields. If I'm to go to the daily chart, you can see Thursday and Friday. See, Thursday and Friday with a strong push to the upside. Beginning of May, price returned to fair value. We had a strong move to the upside. So I'm going to go back to the monthly chart, see, because this is where we still at in terms of our video. Right. So we've got this bullish order block, which is going to be ultimately the draw on liquidity. Price will definitely reach this last down close candle here. This expansion, price is filling up. It has already filled up the liquidity void. Now, when we look at this monthly chart, is there anything else of interest in terms of order flow that we might need to understand? Yes, of course. There's the current high, right? This current high. The current candles high. Now, what significance does it have? It's going to give us our range of opportunities when we go to lower time frame. You can see there our range of opportunities. Let me just draw it perfectly, because I just copied the line, so it was not really exactly to the pip. Right, there we go. So this is our range of opportunities. The further the price is to the upside, you're looking for price to trade into premium for a push to the downside. So that's the monthly chart on the 5-year yield. Now I'm going to go to the 10-year yields, right? Surprisingly, we also have a what? A bullish order block, right? We've got this bullish order block here on the 10-year yield. Then we've got a fair value gap, last down close candle, bullish order block. This is our lowest point, right? Heading into fair value for longs. That's our lowest price point, which came about. So that's last month is low. Look at the current candle. It's still encapsulated in the previous candle, right? That's a bullish harami, if I'm not mistaken. Then we also have our last up close candle, which is bearish order block, right? And you can see that this bearish order block is providing what? Huge resistance in terms of price. And our market structure is almost identical to the one on the 5-year yield. Price is creating lows as it's moving to the downside. We are not creating any new highs. we are creating lower highs and lower lows. That's a bearish market structure. So now with the lowest price point coming in from the previous month, that leaves this whole area here as our liquidity draw, internal range. Where is the range? This low prior to the expansion, the high prior to the retracement. So we've got external range buy stops, external range sell stops. Below these lows that are being created, we've got internal range liquidity in the form of sell stops. Above old highs, we've got internal range liquidity buy stops. Buy stops, internal range liquidity, sell stops, internal range liquidity, right? So I'm anticipating price to be drawn to the downside, and I'm going to mark uh, April's high. Why am I marking April's high? Because we haven't created a new high. So price should, if price is to trade to the highest, say 85% and above, expect a runoff stops. Price trades to close to the lowest low, expect a runoff sell stops. So already you can see we now have a range of opportunities, right? Now, our market structure pointing to the downside, our institutional order flow, this bearish order block is currently in control of price, and price is looking to trade to the downside. So that's the 10-year yield. Let's look at the 30-year. So you can already see on the two that we have looked at, they're all pointing to a bearish move, right? A bearish move, what does that result in terms of currencies? Remember, money seeks yield. I would expect the US dollar to trade to the downside, right? So you can already see, I'm just replicating what I've already done on the other two. Now look at the difference, right? Look at the difference between the 5-year, 10-year, and the 30-year. The 30-year is not creating any new lows. It created this low, and then since then, price hasn't created a new low. Now, this is our last up close candle, but the range is too big, guys. You see, the range is too big for you to use as a form of an array, right? Yes, you're going to highlight it. It's a bearish order block, but it will be of much more importance if you can use premium arrays on the next lower time frame, right? Say on the weekly and daily that are inside your monthly bearish order block. And you can see how price is finding resistance, right? By the equilibrium. See, price is finding resistance and drop to the downside. So with the 30-year yield right into premium, what is the consensus that you're going to put on the 10-year? What is the narrative that you're going to put on the 5-year, right? You see, that's the whole approach. That's how you have to look at it. Now we're now going to look at SMT. Do we have any SMT divergence happening at this moment in time? You can see 30-year yields have already created a new high, right, on the current monthly candle. Then we get the 10-year yields. They haven't created a high. We've got the 5-year yields. They haven't created a high. So what is that telling you in terms of SMT divergence? Why am I talking of highs, right? We're bearish here on the long-term rates. So if price is creating a new high, it's basically running what? Internal range liquidity of buy stops. Okay, let's also look at it from the downside, just for class purposes. The 5-year have created a new low. The 10-year, they haven't created a new low. The 30-year, they haven't created a new low. But you can already see the end result of that. At a time when the 5-year is created a new low, the 10-year and the 30-year were also returning to fair value on lower time frame for a push to the upside. But that's short-term narrative that you can use. For now, I'm leaning to a more of a higher time frame narrative. So if I'm expecting that the 30-year yield is currently running stops above the previous high, right? Right, I'm also going to mark the current month as low. This is for class purposes. I won't really use it in terms of institutional order flow. What I will use is last month is high and uh, December's low, because we now have fair value for longs, which is going to be the draw on liquidities. All these lows that I've marked, we've got internal range liquidity of sell stops, right? So I'm expecting the current run on April high as a liquidation of internal range liquidity of buy stops, right? That's on the 30-year yield. We don't have that on the 5-year. We don't have that on the 10-year yields, right? So you can see how I've already analyzed these three interest rates triads, how I have uh, looked at them from a market structure point of view, uh, from an institutional order flow point of view, and how I'm building a narrative that is supporting my idea of bearish momentum, right? Now, this all comes about uh, being supported also by the Fed stance of not hiking rates or reducing rates anytime soon. We all heard what Powell was saying the other day, and I think we're going to see a bit of a pause in the market, and that's going to result in pressure on dollar, right? It's going to result in pressure on dollar. Already inflation is coming down, heading towards their target. So there isn't really much of a use, or there isn't really much of a need for the Fed to go aggressive on their rate hikes, unless if something drastic changes, right? So now we're going to go on to the weekly charts. Weekly charts on our interest rate triads, right? So we're going to start with the 5-year, right? Now this is the 5-year uh, yield weekly chart, right? Now what do we see in terms of market structure? With an expansion from a monthly premium array, high, low, return to fair value, drop, right? Then we created a new low, we expanded again, price found resistance in fair value, and then it dropped. Now price is again trying to push to the upside. Now since today was a bit of a quiet day in terms of the calendar, there wasn't much movement, but expect this weekly candle to either run stops from previous week and trade into fair value. You can see we've got a bearish order block right there. Once price reaches these levels here, then I'll be hunting for shorts on dollar, right? So you can see we've got a bearish order block right there. So we've got a bearish order block. I still believe we're gonna trade to the downside. Look at the imbalance that's here. See, look at this imbalance here. This is critical, you know. And in your thinking, in your analysis, look at this lowest point, right? Market inefficiency. Do you anticipate price to run to the downside, right? Heading towards the monthly bullish order block. So we've got build up of liquidity above this candle's high and this candle's low. That's the current month high, current month low. So on the weekly chart, there isn't really much except that we have to take note of this bearish order block and our low and high for our range analysis. Right. Then we go to the 10-year. Now on the 10-year yields, we also have bearish order block right here. We also have a bearish order block. Let me just zoom out. I need this to extend. So we've got a bearish order block, and you can see the current weekly candle is heading into this level here, where you should anticipate it to find what? Resistance. It's a premium area, right? It is a premium area. We've got a drop from our monthly bearish order block, return to fair value, drop, return to fair value, drop. Now we are returning again to fair value. Our last up close candle, we should see an expansion to the downside, targeting April low and April low and April high. That's our range. 85% of the range, you are looking for shorting opportunities. You see, you're looking for shorting opportunities. Now you do that if you go to your calendar, right? Let's say we go to the calendar. Sorry for diverting a bit. If we go to the calendar, you can see tomorrow what we've got. We've got pound, euro, CAD. We've got retail sales for the United States. That's definitely going to move these markets. Now let's look at the 30-year yield, right? Now look at the 30-year yield. It's already in premium, above an old high. Remember when I was saying on the monthly chart, it's likely running stops above this high. For the second time now, price is trading above this level here. The third time. First time, huge resistance. Second time, huge resistance, right? So this is now third time. But you can see here now, our order block is only coming right here. See? So price is definitely inside weekly order block. Question: why, Ivan, didn't you mark the other candle, the other last up close candle? This one. Why didn't I mark this candle here? Because we're the run of stop here, which makes this a valid bearish order block, right? So the 30-year yield is already potentially running what? Stops. Now, how do you see that stops have been run? This is where you go to the lower time frame. We're going to go to the daily, and we'll see. Obviously, the daily is not going to close above, right? Market is almost closing at the moment. The daily is not going to close above unless if there's a huge fundamental that comes out, of which I don't think so there is any now left. And then we could see something surprising. But as of now, no, price is not going to close above this level here. But on the daily and H4, that's where you have to hunt now for your run off stops. Price is already in premium. See, high, low, premium. See, short term, lower high, short term, lower, higher low. What do we have here? Premium. See, you can even grab your fibs. if you're not sure, grab your fib high, fib low. Right? You can see there, fib high, fib low. You can see there's optimum trade entry, 62% retracement level. Expect price to find resistance in here for a push to the downside. Where's your stops? Above this high, right? So now let's go to the daily time frame, right? We're still on the 30-year yield. This is our daily time frame, right? You can see already this is Monday's candle. We now have Tuesday's candle. So what I was saying that today is not going to close above. You can see how it traded above, but you can see here there's still relatively equal highs, and we've got a daily bearish order block here. We also have a daily bearish OB right there. You see, these are all the areas now that you have to anticipate price to find resistance and push to the downside, right? Find resistance and push to the downside. Ultimately, our target is right down here. So this is the daily. You can see here, this is our bearish order block and prices closed above it. Let's see on H4 what it looks like on H4. You see, we are still below these levels here. Remember, there's a daily bearish order block here, 1 and 2 and 3. There's a daily bearish order block. I think it's 1, 2, 3, 4. These candles here. That's our daily bearish order block. Price is meandering just above. So what you would want to see is a close below. Let's say on daily, you need a bearish candle that's gonna close. You see, like here, you see this bearish candle. Once it closes below, then you're looking for a retracement into fair value for a further push to the downside. Or it can just happen that the next day it can open and then just crash like what it did here. So we are going to be monitoring this, right? Let's monitor this chart here for a daily bearish close below this level here for us to validate a run of stops above this level. Now let's go to the daily for the 10-year. See, these are our 10-year daily chart, right? We've got our weekly bearish order block. See this bullish order block here? Draw on liquidity. Hold low, draw on liquidity. Price is definitely going to find resistance inside this level here. So tomorrow is actually going to be interesting. And with the retail sales on the calendar, I'll be leaning towards a negative retail sales release, though it can come other way around, but I think I'm gonna lean towards a negative retail release, which in turn will give us an opportunity to short the market. So that's the 10-year yields. You can already see from the daily time frame, H4 time frame. I don't need to explain much further because by now you should know already that once we get to the daily and 4 hourly candles time frame, it's now quite simple for you to define. You can see here we've got a liquidity void right on the H4 time frame, and you can see how price is now struggling, not finding any momentum to build to the upside, just like what it did here. See what it did here? There was this liquidity void, bearish order block, high probability for that matter. See, there's a high probability because it was accompanied by a fair value. Same thing is likely happening here, right? So it won't surprise that by the time we wake up, we've got a market that is already down, right? Probably dollar would have erased all the gains that it did. Most probably last trading hours from last week, right? So going back to the daily on the 10-year, you can see we've got our daily bearish order block here. Though the volume is a bit low, I won't want to use it, and it's just below our weekly bearish order block. So this could be a trap. People will get trapped here to short here, yet price has to run the stops above before it goes lower. Then we get the 5-year. Now on the 5-year, the daily time frame, you can see where our bearish order block is right here. See, that's our 5-year bearish order block. Expect price to find resistance inside the gray shaded area of our bearish order block. And where is our target? The current low of the month, right? So let's go to H4. Go to H4, you can see momentum to the upside is now dwindling. There isn't much emphasis for price to move further to upside. You can see we've got a fair value gap there, imbalance, bearish order block, high probability. Price is now finding some huge resistance inside that price action. That's the hourly chart. Yeah, we should see. I don't think we can see price trade above here. But yes, if it does trade above here, then wait for a run of stops above that old high. You see, that's how you have to approach this market here, because what that is going to do now in 10, it's going to give you emphasis now on approaching dollar index, right? Yes, some people are now preaching that dollar might have found the floor, but nope, I don't think so. I beg to differ, right? I still expect dollar to fill up this whole imbalance here. I still expect dollar to fill up this imbalance right there. Okay. Let me just reduce this a bit. So I still expect dollar to fill up this imbalance, right? Run of stops below last month's low. You can see market structure is bearish, right? We are creating a new lows by every down close candle is creating a new low, except for this one here that happened after redistribution, right? So with dollar again, we are pointing to the downside. Now this is our weekly chart. You can see on the weekly chart what we have here. Got a very funny price action here, but I'm not expecting dollar to keep rallying to the upside. You see what happened here? That's what I'm anticipating right here. So I only need negative news for dollar. I need to anticipate negative news for the dollar for me to short DXY. That means going long on Euro USD and the other majors, Pound USD, NZD USD, and AUD USD. Now this is the daily time frame. You can already see where the draw on liquidity is going to be. Daily imbalance, high probability bullish order block. So we have price will be drawn to this level here. Now in terms of the daily chart, this is our last up close candle, but it's really not a bearish order block whatsoever. Now we go to H4. Now on H4, you can clearly see there is our bearish OB. Right. There's our bearish order block, and you can already see how price is finding it hard to now keep pushing to the upside. Now you tell me, is price going to leave this imbalance unfilled? No, not really. See this? This imbalance is going to be filled. Price is going to fill up this imbalance and trade lower. Yes, we could have another run to the upside, especially if the retail sales come out positive. We could have a run above these old highs here, internal range liquidity of buy stops. We could have price run above that. Let me just check the daily. See, this is our daily. We could have a run off inside above this old high here before we actually start seeing huge moves going to the downside. So Friday and Thursday's price action, I would say that is a trap, guys. Longs were trapped there. I even checked the COT report, but I do believe that longs were trapped on Friday and Thursday, right? So yeah, this is what I wanted to illustrate with you guys. So I'll still be looking towards shorting dollar and going long on euro USD and pound USD. You can already see this is our euro USD prices now, right inside the bullish order block on the daily time frame, and on the weekly there isn't really much in terms of institutional order flow, but this is a short squeeze. That's a trap for shorts from my own point of view. And as for UJ, we're looking for price to trade to the downside. Shorts are ideal from premium array, and then longs are ideal on gold from discount arrays. So yeah, I hope you have learned a thing or two in regards to how I give more structure, more evidence to support my narrative when I look into the markets. So yeah, we are still on in regards to bearish dollar uh, for the foreseeable uh, months to come. So we're looking at about most probably 2 months for us to fill up this imbalance here. 2 months, 3 months, can be 1 month, can be the current month closing bearish, but that would be some huge weakness in a 2 week period. But it can happen in the market. So yeah, anticipate this imbalance to be filled on dollar index. So yeah, that's pretty much about it, folks. And I'll try to keep you posted in regards to the changes on what has happened on the long-term interest rates. So yeah, with that, I wish you guys good luck and happy trading, folks. Thank you.